Welcome to Business Beyond Borders, the go-to podcast for CPA firms seeking transformative insights. I'm your host, Laurence Whittam, and with each episode we'll uncover key insights, best practices, and invaluable resources tailored for CPAs. From trending strategies to diving deep into outsourcing and offshoring, our experts will help in all areas of your business. Hey everyone, and welcome back to Business Beyond Borders. So you're here with Laurence, and today I've got a special guest, David Podell. And sorry if I've pronounced the last name wrong, but you can correct me in a moment. And one of the things we were speaking about, so we had a chat a few weeks ago, and today's episode is a little bit about what a firm can do more for their clients, right? We speak to firms every day and we go to conferences and we hear we should be thinking about different advisory services for our clients. We should be adding more value to our clients and having these conversations more often, not just going and talking to your clients once a year, but going and now seeing them on a regular basis, whether it's monthly, quarterly meetings. But a lot of firms struggle to figure out what they should be actually talking to their clients about on that regular basis. So this is one of those types of partners, like you can partner up with David, and he's going to go into a little bit about his background and what the firm does. But this is around different tax mitigation strategies, right? And you don't have to be an expert yourself at this is the big thing, right? So you should be making partnerships with people like David and firms like his to help add value to your clients, right? So, David, very, very thankful for having you on. Would you like to give just a bit of a background about yourself, what got you into this anyway, and also what your firm does to help firms, right, in that sense, and their clients?
Sure, and thanks for having me, Laurence. So, I've been a financial advisor for 20 years. Along the way, we've had a lot of different changes and evolved that business. And at one point, many years ago, we came across defined benefit plans as a tax strategy for a client. And it was referred to me being an advisor from a CPA. And when we started looking and trying to figure out how to do this, we received about 20 different answers to 20 different questions that were totally different from the next. And we got that case at the time. It was one of the longest cases I worked on and didn't need to be as hard as it actually was, but it was a learning process along the way. And I said, nobody in this industry and nobody in this very niche specific space puts all of this together and goes through all the options and does all the consulting work and knows how to do different areas of the plan and how they work. And this is not a product or a solution. This is based on very different actuarial designs for different types of clients. And I said, if we can make this work, we have a business here. So we created Business Benefits Consultants, which is a tax mitigation firm that is only focused on defined benefit cash balance plans. And that's all we do. And all of our referrals and partnerships and business comes from tax advisors. And when I say that, there are so many people in the industry, as we know, that are doing tax planning, but they're also doing returns, and they're trying to go into more of the planning side, and they're trying to develop relationships. And the referrals that we get are generally from the tax advisors who are putting these types of strategies in front of their clients, among other ones. So we know there's multiple different tax mitigation strategies out there. I feel like I've heard of all of them and have learned all of them, and then another day goes by and I hear a new one. So we are by no means an expert in 99.9% of those things. But when it comes to defined benefit plans, what I realized a very long time ago that most people don't know is that every third-party administrator, every actuary has a very different design and a very different way of doing things than the next. And I think what was happening, or what I saw in the industry, is that became a disservice because somebody would go and learn about these plans and tried to talk to a client about them. And not only were they complex and they weren't getting all the information, but they didn't realize that there could be a better option that's out there with the same name, and they just had no idea it existed.
So can you explain the defined benefit plan a little bit more, like in terms of like what it really is, like why is it valuable to a firm's clients, for example, and like even just how to identify, okay, this is something as a firm I should be thinking about for this very specific client? Like, is there certain identifiers that are there which sort of bring that up? Like, what does that overall picture look like?
Yeah, the buzzwords in the client profile. That's the biggest question that I'm asked. So I would say business owner or solopreneur. We see a lot of 1099 consulting type clients that have the ability to put away additional income and additional dollars toward a retirement plan that they do not want to pay taxes on. Then you have the businesses where they're successful, they have good income coming in, good profits, and they're trying to either push revenues into the following year or they're trying to create expenses that they don't need. Buying extra trucks and cars and equipment and things that are not necessary just so they don't have to pay taxes. These are all good profiles for anyone that wants to put money into a defined benefit type of plan. Now, when someone says, well, what's the buzzword or what's the one-liner that you would use? My answer would be anyone that can put away $100,000 or more into a plan that they get to keep for themselves, for retirement, and to reduce their tax liability. So if you're doing tax planning for somebody and they're just complaining about what else can I do? What else can I do? What's next? Do you have any other strategies? Or you're trying to acquire clients of a higher net worth, of a higher income, and show that you're on the cutting edge of strategic planning. This is a great way of doing it. It is complex. There is a lot of things involved. Our firm brings all of that together and is kind of that easy button for that.
Now, so what does it look like when you're working? So you're working mainly with the actual tax advisors, right? So if a firm has that and they're doing tax planning or they're doing tax strategy sessions with their clients or any type of tax advisory, like those are the types of firms that you would traditionally work with, right? And what does that partnership look like? Is it they bring you in as an expert to sort of like evaluate that, or should they be getting the information from the client and then working with you in the background, right? What does it look like?
Yeah, that's a great question as well. It really depends on how they want to do it, and we can do it any way that they want. In fact, we do get a small portion of referrals that come from financial advisors as well, because the great thing about us is we don't need to do the advisory asset management type stuff. That can be done if there's an advisor in the picture. And a lot of times the tax advisor is saying, go talk to your financial advisor about a SEP or a 401 or some type of retirement plan. And those are what I will call on the shelf, easy type solutions. But when you get to the bigger numbers and you're looking to save six figures in taxes or more, that's where putting money into this type of retirement plan is it moves the needle in many ways when it comes to that tax liability. So the way that it generally works is we do have an intake form on our website. I would recommend anyone just reaching out to us, whether it's email or just through the intake form or any way, just to talk through a case, just to talk it through, because I think a lot of the information is that we consult on. It's great to hear about it first, and then we can help the tax planner identify if this is a prospective client for them or prospect for this type of plan, at least. Once we get that back, we take a look at it and we come back with a bunch of questions. So we're not a computer or an algorithm where input in and here's your output proposal. It doesn't really work that way with us. When we get information, we want to know everything about it. Sometimes we get plans that are fairly complex, where there's multiple entities or the tax advisor's trying to restructure entities and wants our opinion on what they can do and how to do it. So the conversations are very important. We get a lot answered from those conversations, and the intake form is unique because it does ask questions like, what's the plan going forward? Does your client want to sell? Do they want to fund at a certain level for 1 year and then a different level at others? One of the biggest misconceptions, and I wrote an article about it many years ago, was a myth on this, is that you have to keep putting in the same amount of money every year, and that has to be fully consistent. And that is not true. We have plans where we've put in huge amounts of money, and then the next year went down to zero or put in very little money. So there is a lot of flexibility in these plans if they're built properly. So generally, we get that intake form. If it is the tax advisor, it's going to say submitter information on there. They're going to say that they submitted it. They can put in as little information as they know. And then we can start talking about census details. You know, who's on payroll, how many people are here, dates of hire, all that stuff. And once we gather that and take a look at it, unlike going directly to a third-party administrator who's just going to give you an output, we're going to go and think about which design do we want to look at this for, and we might send it out to 3, 4, 5 different actuaries to get those 5 different answers. And then once we find what is best fitting for what that tax advisor is trying to do and that client's trying to accomplish, we are going to go and put it on a basic proposal for them. They can bring us in to present that, and generally that's what happens. They'll bring us in to do the presentation along with them. I do have situations where they'll just put me on an email and say, please talk to the client about this. This is going to be a great fit, I think, for them. Please work with them directly. You mentioned early on, the ability to get in front of clients more than once a year, to talk more than just returns. This is the best way of doing it because we need that tax advisor fully involved to know what the W-2 should be, what does profit look like this year, what do revenues look like this year. We make adjustments throughout the year to adhere to how the client wants to fund these plans.
So how involving is it for a firm that's looking at doing this, right? From that perspective, like it sounds like you can vary that a little bit as to how involved they want to be, right? But let's say, obviously, do they need to be meeting with their client on a quarterly basis to be assessing like what's going in? Is it a yearly type conversation when they do have somebody that they've brought into that defined benefit plan? Like what does that sort of involvement look like over a year for the tax advisor typically, right? So that they can get somewhat of an idea for it.
Yeah, they do not have to do quarterly reviews or semi-annual reviews on any of this. We do. This is something that we're going to send out a funding letter that's going to go out probably 6 to 7 times a year. They're going to be CC'd on that email. So those conversations are going to happen regardless, and they're going to be involved regardless. So they don't have to go and do these reviews on a quarterly basis. They don't have to call us, but we are going to reach out to them when we need things. And we are going to do, if there's anything where there is a review or we do questionnaires and mid-year packages and all that stuff, they're getting CC'd and fully involved in all of it to be there. So if they're charging to do tax planning, they can back up the fact that they are involved with this. Okay.
And then what sort of size firms do you typically work with? Like, or is it certain firms that have certain industry groups or niches that they're focused on, where you would find that there's more opportunity than less right, in some cases. So can you give that a idea as well? Like, is it a small solo practitioner that has 20, 30 clients, right? Or is it really somebody that's more of a smaller firm that, again, they still have a sizable book of business. They probably have certain industries that they focus on where you're going to see more of that than not.
The industry question I'm asked all the time, and there is not one industry, and it's because this defined benefit has been around for so long, and it was primarily used in medical and law. So doctors' offices, surgeons, surgery centers, partnerships, just practices. They were using this because incomes were steady. They were high income, high profits. We saw a lot in law. Now I see it in every possible industry, probably more in the consulting side than anything else, where people are just solo. They have some kind of solo business. They're getting 1099s or income from somewhere. Sometimes they have a W-2 job and it's a side job that is just generating a lot of money, or it's a side business that is generating a lot of money. So, I mean, if you think about a realtor who generally puts money in a SEP and gets capped out at a certain level, and then you have a realtor who's super successful and wants to go and put away $150,000, $250,000. There are two different levels of profitability and success that are there. Those are great. That's one person. We generally don't have employees that are there that we have to test through. When there are employees, this is what I will call an owner's benefit plan, where a 401k is an employee benefit plan. I call it an owner's benefit plan because what we're trying to do is tilt the scale to the owner or the taxpayer's benefit. If there's an owner or their partners, they're paying the taxes. And what we're trying to do is get them 90% or more of that benefit. And sometimes that becomes 97%. So we've done plans with a lot of employees. I would say the sweet spot when you have employees is generally under 30 to 40 employees. Anything underneath that is probably the sweet spot where it works the best. But we've had huge plans where we've gotten the owners in the 80% range, and it worked out.
So, and as we start to wrap up, what is, like, do you go in day one and sort of work with the firm to identify certain potential opportunities, like on the background, or is it really something where you sort of more coach the tax advisor to, all right, here are the types of conversations, like on the next conversations you're having with your client, ask this question as well, right? And you set a note. So then based on the answer, that's where, bring that to me, right? Submit one of the forms, like then we'll figure out, yes, this sounds like an opportunity where we're going to explore that. Like, is it a proactive or is it more of a ongoing type of engagement that is there for it? What does that look like?
It's always ongoing. So once we engage, we're there for the life of the plan. We're continuously doing reviews, making sure funding is correct. We're fully involved in the plan. We do not do implementation and then we're out. We're the quarterback, so we are the gateway to actuary, TPA, advisor, record keeper, you name it. We're that one stop. So, and we don't do all those things. We are that one call and we are one place of coordination.
Okay. Perfect. And then, but what about from that first step, right? With a firm, like, with a tax advisor, are you going in there to help them identify who those potential opportunities are from the get-go? Or is it more that it's, like I said, have you given them somewhat of a, here's the form, right? This is what we need to know. Just do this as you're going along, right? And opportunities will pop up. We'll assess them as they come, right? Or is it more of a, yeah, let's do it all at once. Let's figure out, these are your set of clients where there's even probably an opportunity there. Let's just focus on those first.
We're not going to anyone's book of business or doing CPA consulting or any of that. What we want to be is that first phone call when somebody is talking to a client and says, oh, they want to save on taxes, they have good profits, what more can they do? because if this doesn't work for them, we probably know 50 other things that just to bring up to them that they can go and find somewhere else and work on somewhere else. But we want to be that call when someone is paying too much in taxes. They have some type of business owner status, what I generally call that. They have control of their own time and they have control of their own money. So they have the ability to control both of those things. So it's usually going to some kind of corp or 1099 or whatever it is. And then that case is being brought to us.
Understood. And then again, really appreciate you coming on, David. So can you share with everybody, so like, what's the best place for them to reach you, right? To even have that conversation, learn a little bit more about this if they think that there could be opportunities with their clients. Like, where's the best place for them to reach you?
Yeah, I can be emailed at david@bbconsultantsllc.com. Best place to go with resources and to contact us is our website, which is businessbenefitsconsultants.com.
Okay, cool. Again, and we'll post and we'll definitely post all the links and everything like that as well. So, but if anybody sort of is thinking about, yes, this could be a way to help my clients. At the end of the day, this is about you thinking about the value you're adding to your clients for this. Then I would suggest reaching out to David for that conversation, learn a little bit more about it, get comfortable with what those questions are to ask. And then there could be ways to then add this into your next consulting calls with clients. And again, go do some research on it, because again, I have heard more and more about, again, these tax strategy calls that firms need to be making. So this is a great sort of stepping stone into that. So really appreciate the time, David. Thank you for sharing a little bit of the insight into your world.
Thank you.
Thank you to everyone else listening on Business Beyond Borders. Cheers, guys.
Thank you for tuning in to Business Beyond Borders. I'm Laurence Whittam, and it's been a pleasure bringing you impactful insights tailored for the modern CPA firm. Remember, the world of accounting is vast and ever evolving, and we're here to navigate it together. For more resources and episodes, don't forget to subscribe and reach out to our experts. Until next time, keep pushing the boundaries of your business and explore the limitless possibilities beyond borders.